Accounting isn't slow because it has to be. It's slow because the systems are broken. Jeff Seibert has spent 30 years building software, from startups to leading product at Twitter. And what he saw didn't make sense.
We had Google Analytics. We had all these live dashboards, and you knew exactly everything that was happening in real time.
But when it came to finance,
I was sitting there waiting 2 to 3 weeks for, honestly, a black and white P&L, balance sheet, etc. from our accountant.
same company, completely different reality. And now, AI is starting to close the gap.
I think, honestly, you are at risk of being replaced by an accounting firm that adopts AI correctly.
This isn't about automation, it's about who adapts first.
And I now predict by end of 2026, the month-end close process will be largely automated. And so what I mean by that is...
Hey everybody, Dave Costello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today's guest is Jeff Seibert. He is the co-founder and CEO of the startup Digits and former head of consumer product at Twitter, now X, is creating the world's first AI-powered accounting platform tailored for small businesses and startups. We were just joking right before I hit the record button. You know, we're going to have this interview out with Matt from Highline, which is this, accounting firm that's really doing some interesting things in the profession. And Matt just went on this spiel for like 10 minutes, digits this and digits that and this, that, and the other thing. And so we're going to talk about what made Matt so excited about Digits. We're really going to dig into the AI native accounting revolution. And we're going to chat with Jeff, who's a real practitioner in the space. You know, he's been a successful serial entrepreneur. He's worked and scaled at some of the largest technology platforms. He's an active angel investor in over 100 startups and an award-winning documentary film producer. Maybe we'll get that one at the end of just where that what that is and where that came from, Jeff. But in the meantime, welcome to the show.
David, you're too kind. It's so great to be here. Thanks for having me.
Yeah, absolutely. So let's unpack the journey of Digits, if you will. It's you've marked it as the world's first Agentic General Ledger. What does that mean? What is Digits and how is Digits, on a different track relative to all the general ledgers that are out there?
Yeah, perfect. So my whole life has been coding and sort of tech entrepreneurship. Digits is my third company. And the journey here actually started at my prior startup and then what I saw at Twitter, because Twitter acquired my previous company. And so I saw the whole startup journey and then I saw the larger company journey. And what struck me was the difference in data quality between finance and product engineering. And on the product engineering side, we had Google Analytics, we had A/B testing tools, we had Grafana, we had all these live dashboards, and you knew exactly what the users were doing, what the servers were doing. I mean, we had a Twitter command center where you could basically see everything that was happening in real time. And then on the finance side, as a founder, as a business owner, I was sitting there waiting 2 to 3 weeks for, honestly, a black and white P&L, balance sheet, etc. from our accountant. And I at first thought this was just a small business issue, but then I encountered the same thing at Twitter. And I remember this. I went to corporate finance once and asked, hey, what's our budget? Can I run an event for our consumer team? And the actual response was, oh, we haven't closed those books. Give us 3 weeks. And I was like, what? Like, you have 100 people in finance. What are you doing? And so that was sort of the genesis of Digits. And what I realized as we met with just literally hundreds of accountants and finance folks was how well-intentioned and like hardworking everyone was and how much they were held back by the software. And so we started Digits to be the first sort of, I can say now AI native, but back in 2018 when we started, honestly, it was ML native, machine learning native approach to accounting. And we realized that in order to basically bake the intelligence deep into the ledger, you had to create a whole new data architecture. And so that's what we mean by Agentic General Ledger. It's a accounting platform, double entry, general ledger, but the models actually live and work within the ledger itself, not something you're sort of bolting on.
Got it. And what are some of the use cases that get unlocked when you have this philosophy and this approach like you have at Digits?
Yeah, so two of the most powerful ones are the core bookkeeping and reconciliation workflows. And so, of course, everyone is used to logging in, processing the bank feeds, setting up rules. Then, of course, you have to manage the rules over time and create new ones and so on as things change. And that takes a ton of time. And then once everything's in there, you then have to reconcile it to the bank statements and make sure you didn't miss anything or make a mistake. And that's, again, this very manual process. And so when the models are built into the ledger, they can actually do that work natively. And so we train models that basically form a layer cake. So they train on each individual business for an accounting firm, each individual client. Then we train a firm model that trains across your work, across all your clients. And then we train a global model that's sort of the fallback across our entire data set. And this allows the ledger to apply basically multiple levels of intelligence to each inbound transaction so that it gets booked in the best possible place for that business. And then on the reconciliation side, we literally automatically pull the PDF bank statements from supported banks. If your bank isn't supported, you just drop the PDF onto digits, and it reconciles each transaction to a pixel bounding box on that PDF. So you can literally mouse over the transaction and see it on the bank statement. And that's what you get by really sort of tying all the data together at the core versus trying to work with like API connections and deal with sync issues and inconsistencies.
Yeah, I don't know if I'm going on a side tangent here, but there's a lot of these like non-general ledger, they're kind of bolt-on month-end close automation tools will make it easier and faster. And a core part of this is how seamless can the client collaboration and the feedback loop be.
Yep.
But does Digits think of the world in that way, or is that like, well, the fact that that conversation has to take place is an engineering problem? Like, what, or is it somewhere in between?
Yeah, no, it's an engineering problem, and it's a business decision for the firm. Do you want to stack tech on top of each other and sort of hope that it all works? And I would call out pay for each level of the tech you're stacking onto each other, right? Like you still need to pay for the ledger, and then you pay for the automation tool on top, and so on. Or is if you fast forward 5 years, are you just going to be using a ledger that has that built in? And that's our belief and philosophy that in order to get to that future where you really want to be, we had to start from scratch and build it all natively.
Yeah. So do you have a what you would kind of see in maybe these bolt-on tools where you have this like client collaboration zone, or you kind of are like every time we see this be a problem, there's a feature we need to build, right? So or do you have heavy client collaboration in your software?
Yes, Digits is fully collaborative, all baked in. So you invite your client, you can comment on anything in the system, you can have a discussion right there, including like the row level of a report. And so you like scroll down to, oh, my T&E section of my P&L, boom, let me drop a comment for the client right there and ask him a question. Or I have a question on this transaction, I can drop the comment right on the transaction. That's another example actually of what I mean by a new data model. If you look at traditional ledgers and all the big names, right? QuickBooks, Xero, Oracle, SAP, NetSuite, et cetera, they're all traditional relational databases. And
Hmm.
so you can think of each transaction that comes in as basically a row in that database. There's not much more meaning behind it. And so like when you see an Uber transaction, it just sees UBER. It doesn't really fundamentally know what Uber is. And with Digits, what we designed way back in 2018 was what's called a vector graph data model. Everything's an object. And so Uber is an object, Lyft is an object. If you know how that business is booking Lyft, you know how it should likely book Uber, right? But then you split it up, and like Uber Eats is different from Uber and should be booked separately. And so with Digits, it's this graph of objects, and you can comment and share any individual object in the system, which makes it really collaborative.
Interesting. It makes me think. So you've been going on this journey since 2018. I think accountants sometimes wrongly get pegged as late adopters. I,
Mm-hmm.
I know when we got started, everyone's like, "Good luck selling to accountants," and then I was thinking they use software all day long, like
Yes.
all the time, and they're always adopting new tools. And I was at a talk last year, and somebody's saying, they are the gurus of change management. Is every year new tax laws get rained down, and then you have to adjust
Yep.
immediately to this new reality. But I'm curious, in something that is so well established like a general ledger, like how long did it take you to kind of get to your first version, and then how long thereafter was, call it whatever milestone you want to pick out of the first 100 customers thereafter?
Yeah. So it is a long journey on the software side as well. And I think you're seeing a lot of hype in the space right now. Of course, every product claims to be bolting on AI. There's all these new sort of AI bookkeeping startups, et cetera. To do this well, you have to be really serious about it and be in there for the long haul. So we started in 2018. We raised 100 million in venture capital, pre-launch, pre-revenue, because we knew we would need that to go build it. If you look back at the history of the space, it took NetSuite almost 5 years and 125 million to build NetSuite. And so we were looking at sort of a similar journey. We spent basically 5.5 years heads down building in effectively stealth mode. In January of 2024, so almost 2 years ago now, we hired a team of accountants to start using our ledger with real clients, with real businesses. And so we did over 2,000 month end closes across 150 real businesses on the ledger in order to prove to ourselves that it worked and it had the feature set you would need to use. And then that gave us the confidence to finally launch it this past March. So we've only been in market for 8, 9 months now. The reaction has been extraordinary. So Digits is already in use by over 150 accounting firms, thousands of downstream businesses. It's been really, really cool to see, but it's been a long journey for the team for sure.
What have you learned, during the 7 years, 6, 7 years to launch? Ha- what did you have to understand from a motivation perspective to keep rolling this giant boulder uphill? Like I
Yep.
imagine that, I don't know, like I'm in software, you're in software, what always happens? You're standing there 2018. Don't worry, by 2021, we're gonna have, I don't know what year you picked.
Right.
It always is wrong, especially with like, how big of the vision was when it would take a long time.
Yep.
So I guess what are your takeaways from how do you keep people motivated, focused, aligned? Because this is both, you had a long runway, but you can't let off the gas. So what have you learned in that journey?
Exactly. You can't let off the gas and you have to keep the team together and excited. And I think this was a very unique, sort of very fortunate opportunity to do that. This is my third company. I had started and sold two prior startups. Both of those were actually very quick, literally start to exit in 16 months, both of them, which was
Wow.
crazy. And the team for Digits, the initial team for Digits was the Crashlytics engineering team, my prior company that I
Okay.
sold to
That's
Twitter in
huge.
2013.
Yeah, that's
And
massive.
so we had already been together since 2011, so sort of 7 years when we started Digits. And of over the past 7 years building Digits, none of those people have left. And so we have kept the entire original engineering team for Digits. And I think that's how you get the sort of consistency and depth of seriousness about the space. It is not easy. Like the first 2 years, as you know, in the startup world, like that's fun. You're building, you're going to get something out to market and so on. Year 3 and 4, when we still had not launched anything really, those were tough years. And you like, you don't even see the light at the end of the tunnel because like there's still
Yeah.
so much to build. And then it started getting really exciting in sort of 2023 and then going into our private beta in 24. And we could see that we had built something pretty unique. And so it's been, yeah, it's a journey that you spend a lot of time on as the CEO, keeping everyone together and motivated.
Yeah, that's amazing. What looking back in that year, like you said, you call it the dark year. I don't know if that's 21 or 22.
Yep.
What would you tell yourself now that you're kind of you're out there, people are now using it. There's still so many journeys and mountains to get through, but like I guess if somebody's listening right now and they're trying to build something and they just feel stuck, they feel like their traction wasn't what they thought. They're even if they launched their firm this year, I went to get 20 clients, they have two,
Yep.
right? So like I guess what can somebody listening kind of take away from that dark moment, or what would you tell them if they're going through something similar?
Yeah. I would say most companies, not just tech startups, most companies, if they fail, it's due to lack of execution or the founder giving up. And so you need to have conviction in why you believe your business deserves to exist in the market. And is the market large enough to like justify your existence? And it'll be a large opportunity if you continue to pursue it. And ultimately, I think that, I mean, the difference between sort of brilliant and crazy is very thin, as they say, right? And so you sort of have to be irrationally obsessed with this thing coming to fruition. But yeah, for firm owners who are out there and you haven't hit your client goals or whatever it might be, look deep down and like, is what you're offering unique in your market? Do you have the
Hmm.
conviction that like this is something that deserves to exist, that must exist? And if that is true, then keep going because the only reason you're going to fail is if you give up.
Yeah. And you know what? There's such I think your journey is really interesting too, because if you had raised less, there would have been
Mhm.
such a tendency to be like, well, let's launch Digits bookkeeping
Yep.
service
Yep.
because we need to bring revenue in and we need to and you could justify it. If we launch our own service, then it could use our own tool. We're generating revenue and it's
Yep.
testing the tool. And I think it's so easy when you're in those dark periods to kind of look at the fast revenue to try and
Yeah.
pick up any momentum. But I'm assuming that you didn't have this because you raised 100 million in 2018. Is that all fair to say?
That is, if we had raised less, it would have been a disaster during COVID because we didn't have a product that we could sell at market easily, and we would have had to raise again. And so, yeah, it would have been definitely tough. I think that's another great piece of advice is as the CEO, you have to plot out the fundraising strategies for your company at least a full round in advance. I've now raised 6 venture rounds over the course of my career. And the biggest thing I think of is when you're in the midst of closing your current round, the only thing that matters is setting up your next round. Is as you're evaluating investors and the folks you want around the table, how will they play in your next round? And that we tried to be very thoughtful about and fund the company for the journey we knew we sort of had to go on in order to
Yep.
enter this market. And I think a lot of first time founders struggle with that.
Yeah, and you know what? It would have sounded very impressive all the same. If I mean, at least to normal people, I think to say, hey, we raised 10 million,
Yep.
we raised 15, 20.
Yep.
And we've seen that in the space. We see that in the space this year. We're recording this in 2025. But again, if you need more capital, and you always need more than whatever you see, like things always take
Yep.
longer and they're more expensive, unless it's the Hoover Dam. That's like the one thing everybody points to. Under budget, aside from
Yep.
that, everything seems to be going over. So I think it's important, right? So if you're running your own firm, what are you doing? And I understand on one hand, if you need to make your mortgage, my goodness, make your mortgage. But if you have enough to kind of make your basic needs, then it's a matter of maybe you're not niching down enough. Maybe the way you're
Mm-hmm.
presenting your offering is not contextual enough to dental practices or wherever you're talking to. So I think that's
Yep.
really great, which is to kind of take a step back and spend some thinking time on the strategic questions in your business. To shift gears a little bit, Jeff, you mentioned these AI bookkeeping startups. Um, there isn't a day that goes by that I don't open up LinkedIn, email, whatever, and there's the new accounting firm killer. This is
Yep.
the thing for $29 a month that's going to get rid of tax, get rid of accounting, get rid of CAS and advisory.
Right.
You're deep in the weeds of the technical space. How should accounting firm owners be thinking about this influx of, like, your job's about to go away, or these low cost automators that are coming in? What is this? Is this a hot air balloon? Is this a real tsunami? Like, what's going on here?
Yeah, the hype drives me equally crazy. As you know it just as well as I do, like accounting is a profession of edge cases. It's a profession of relationships. It's a profession of judgment calls. None of those things are what AI is good at. And so you are not going to be replaced by AI. I think honestly, you are at risk of being replaced by an accounting firm that adopts AI correctly and aggressively, right? Like the competition is certainly going to increase, but it is not going to be the case that some AI comes in and wipes out accounting. That is false. And I think, unfortunately, a lot of tech startups are being misleading in what they're talking about. A lot of these AI bookkeeping things are like, hey, we have sent your chart of accounts to GPT along with the transaction and asked it to book it. And that is not the right approach. We have run extensive benchmarks. LLMs max out at about 70% accuracy at classification problems like bookkeeping. You need a totally different branch of models. And so at Digits, we spent 5 years training predictive models, not LLMs, to classify transactions. They can be highly accurate. We just exceeded 97%. And so I think that's why when you're talking with companies, I would really push them to go beyond the hype, sorry, and what model are they using for what is the input, what is the output. And if you start asking some of those basic questions, you'll get a sense of what's real and what's not. And any serious startup or company in the space will be more than happy to answer those questions. It's the ones that don't really know what they're doing that'll struggle to answer those questions.
Yeah. So is it safe to say be wary of ones that are saying we're going to automate the insert X workflow, but it's sitting on top of a ChatGPT model of some sort?
Exactly, exactly. And it's so easy these days to build a demo that looks nice and then it
Yeah.
immediately falls down with real data. And so that's the other thing to be wary of.
Well, the hard thing too is that you're right. It's easy to build the demo. You can open up a Lovable, and you can.
Yep.
I mean, I think Lovable is great for prototyping. I don't know if it's yeah, earlier this year there was the height. Now we're in the trough of disillusionment. It feels like with prototype with vibe coding, but I
Yep.
think your ability to get prototype is amazing. But then what in some ways the industry is known for, the tech industry is saying like, here's the prototype, and then I'm gonna outsource for the accounting part of it, and we'll figure it out as we go.
Right.
I have
Exactly.
never seen that model where once it's exposed, that's what's happening, and it always gets exposed in some way. I've just seen it over and over and over and over again.
Yep.
I never hear 3 years later, and now it's work. Now the tech is working, right? I think it's just again a division of focus, and the problems are so hard that I've never seen it work out.
I completely agree with you. I have also never seen that example of like, it's so tempting to sort of get your prototype, then hire a team of outsourced humans to fill in the gaps. And then you'll be like, don't worry, I'll automate their work over time. It'll be software. That has never happened from anything I've seen. And so that's why we've been so focused on like, we are a software company. We build the software. There are no humans behind the scenes like patching the gaps because you will fall into that hole and never be able to build out of it.
Yeah, it's so addicting. It's so addicting. Just one more button seat. One more button seat. We got to
Right.
meet our growth numbers. We got to meet our growth numbers. We got to keep our churn numbers low. Butts and seats. Butts and seats.
Yep.
Thinking about ahead in the future, if you were to squint, what are the next generation kind of accounting workflow use cases that you see are coming up over the next 12 to 18 months? What has a high probability of happening from an
Yeah. So
AI space? Yeah.
this has actually been an evolution of my belief over the course of this year. If you had asked me this back in January, I think I would have been far more skeptical. But the models have really come a long way. And I now predict by end of next year, so end of 2026, 12 months from now, I think the month end close process will be largely automated. And so what I mean by that is 90 plus percent of the bookkeeping, 90 plus percent of the reconciliation, 90 plus percent of the schedules, work papers, right? Fixed assets, prepaids, et cetera, et cetera. 90% of the review and anomaly detection and variance analysis, flex analysis. Honestly, probably even 90% of your client comms out with the initial report. It's like, hey, here's what happened in your business this month. This is what you should pay attention to. The AI is never going to get any of that to 100%, but I think it will get you 90% there across the board, which will dramatically change the time it takes to close each client. And so you could see a world where you're closing clients in an hour to a month by the end of next year, which I think has the opportunity to really reshape firms and allow them to scale quite significantly. And this is what I mean by the sort of upcoming gap between the firms that adopt AI well versus
Yeah.
those that sort of just stick to their current process. I think you will be outcompeted quite quickly.
Yeah, because what's going to happen at some point, this is going to take hold, and so I mean, if you kind of just play this out, then all of a sudden, I'm just going to use round numbers. You have $1 million firm that has a profit margin of 300,000, or that profit 300,000. They adopt this, and all of a sudden, they can go they just again for simple numbers, they let's just say they increase their top line to $2 million. If it was a parallel path, it would be $600,000 profit, but maybe it's actually 800 or $1 million in
Yep.
profit. So all of a
Agreed.
sudden, in the kind of shortish term, you're going to see more profitable firms hit market. And then what happens once more profitable firms hit market? One of two things. They might all of a sudden say, you know what? We're actually going to go down market because we can keep our margins by doing so. So we're going to undercut our competition in prices. And what
Yep.
does the competition do sometimes when you cut prices? Well, you could go with David's CPA, but you get what you pay for. And it's like, oh no, actually, they say the model's doing
Yep.
90% of so like it just seems like this is what everybody's doing. So if you don't adopt it, then your margins start to decrease,
Yep.
where theirs might stay net the same, and they're getting greater market share, or they could take that additional profit and go into sales and marketing, advertising. They can launch new additional services. They can acquire other firms with that profit. They can launch wealth management. They could go
Yep.
into more CFO or controllership work. And again, it just like obviously money is a tool, so they're just going to have an advantage. And there's the much butchered Bezos quote, which is like, "Your margin is my opportunity." So like as they implement this tech, things are going to get shuffled around quite aggressively. And I don't have any insider knowledge about private equity, but you better believe they're looking at this and they're thinking long and hard how to pull this into their system as quickly as possible. Doesn't mean the average accounting firm's not going to win with it as well. But I mean, things sound like they're going to, if when this happens, it's really going to start to shake up the industry.
100% agree. I mean, just this morning, OpenAI announced they're investing in Thrive Capital's accounting roll-up strategy. So there's going to be a lot
Wow.
of money in the space on buying out these firms. Yeah. So it's going to move, I think, faster than people expect.
Yeah. Zooming outside of accounting, what are some of the business like you must be thinking about for you as you run digits, from your project management tool to your CRM to anything else you might touch, customer support. Outside of the accounting and general ledger space, what are some of the most interesting AI use cases? Are they running your marketing team? Do you have agents cold calling people? What have you seen being like this is getting really amazing for other parts of the business?
Yeah, such a great question. So I definitely believe in the human touch is key and the relationships are key. So no,
Yeah.
we don't have AI doing our marketing. We don't have AI doing our sales. Our sales folks are actually really passionate about the accounting space and love talking with folks. What we have been using it for is just internal operational efficiency. So two tools I'll call out. Whisper is incredible. WISPR. Check out Whisper Flow. It's effectively perfect voice dictation. And so I now dictate all of my Slack messages, emails. I even dictated our board doc last quarter. It was like 30 some pages. And it's such a time saver because I could speak at 200 words a minute. I can't type that fast. And so I very rarely type now. It's actually been like totally life changing. And then the other one, I'm sure a lot of folks have heard of, if not tried, but Granola on the note taking side is incredible. And so we use it for all of our internal meetings, and it basically allows you to just focus on the conversation. It takes notes for you. It calls out the action items, etc. So huge time saver.
For something like Whisper, I'm going to speak selfishly here. So sometimes I'll have this train of thought, right? So I'll open up a voice memo and I'm just thinking about whether it's go to market, product, and it transcribes it perfectly. Can I then ask it to clean it up for readability? Can it make me sound more succinct than I typically am?
That is a great feature request. I don't know because I haven't used it for that use
Okay,
case.
okay.
There may be some other tools because I actually have the opposite problem. When it does change the words, sometimes it changes the tone or meaning of what you're trying to say. So what I like about Whisper
Yeah.
is it is verbatim. And so like if you pause and say like or whatever, it does that, which makes you come across a little more human. I agree for like maybe for emails, you don't want that. So I'll chat with their team. I think that's a great request.
Yeah. Yeah, it is a fine balance because you don't all of a sudden you don't want 17 M dashes in your email response
Exactly.
or
It can't be too AI. Yeah,
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 yeah.
yeah. Just where I say it three times, just pick the one you like the most, right?
Right.
that kind of thing. I have another question about granola. As we wrap up, and then we'll do some call outs on how people can connect with you. This note taking space is so busy.
Hmm.
It's granola is definitely not first.
Yep.
Zoom has a built-in one for free. Google has one, and yet granola comes out. I forget when, 2 years ago. I don't know, and it was just like it took the oxygen out of a certain segment of this market.
Yep.
And I think most people listening, you should have a note taker. If not, you know what they are. But what made granola so successful? What did they key in on that allowed them to wedge into such a competitive space in your mind?
So to me, it was the ease of use. Granola was the first one I tried that just worked, as in it sits on your computer. It automatically understands when you're in a meeting and it just takes the notes. It doesn't have to join. You don't need to accept it. It's not like awkward to your guests. It just runs 24/7 in the background on your computer. And that's actually the same sort of user interaction pattern I liked about Whisper. Is it's just always there. Whenever you want to dictate, you just push a hotkey and start talking. And so I'm a huge fan. Like my college major was actually human computer interaction. I'm a huge fan of really natural interfaces. And so that to me is what made granola just like instantly jump to the forefront. And that's the same approach we've applied at Digits, where it's not like there's no chat bot where you're like, can you please reconcile this account? Right? Like, I don't need more people to talk to. I don't need an agent sitting there that I have to like tell what to do. it just knows the accounting process. And so it just does it as soon as the statement's available. Like that's what I mean by like just really natural technology interaction.
I love that. And you're spot on with granola. There's a project I'm working on, and my co-founder had granola, and it just runs in the background. So there's no add, don't add, and he sends over the
Yep.
summaries. And the summaries are great. Are they better than insert another tool? I mean, it's maybe incrementally better. It's not so mind-blowingly better,
Yep.
but the ease of just always having it on. Sometimes when I hear ease of use, you think about this like pretty simple UI, but it's no, it's literally getting the outcome delivered. And I hope for folks listening that allowed us to go on the software tangent. That also goes for you and your clients. Your clients want books done in a timely manner to help them make better business decisions. So
Yep.
are you helping them make better business decisions, or are you texting them about what's the Starbucks, should be categorized for? Like you
Exactly.
need that information, but it's not valuable for them,
Correct.
right? So, um, Jeff, if somebody wants to connect, reach out with you, learn more about digits, what's the best place or way for them to do so?
Yeah. So digits.com, super easy to spell. Go on. You can book a call with our team. You can sign up for a free trial and link any of your accounts and so on and see the AI at work. So check that out. But once you want to set your accounting firm up, there's an accounting partner program we have. We have wholesale pricing. We have dedicated training. We have all sorts of stuff to enable your firm. So book a call. And I'm super easy to get in touch with. I'm literally Jeff at digits.com. So feel free to email me.
I love that. And I have no skin in the game here, but I would encourage you to check out Digits. Whether or not you're exploring or actively exploring a general ledger, just become a student of the market. Go out and see these tools. I've heard, really interesting things about Digits. They're doing something different. Just tinker with it for tens of minutes. See what it's about, learn more, talk with some folks. Highly encourage you to do so. If you enjoyed today's interview, we're going to do a full write-up and we'll link out everything at jetpackworkflow.com/blog. That's jetpackworkflow.com/blog. Enjoyed today's episode, leave a review. And if you really enjoyed it, this is a bit different. I was telling Jeff, we usually talk with accounting from owners. We're getting in the trenches about pricing. This one's broader. We're going to the world of AI. If you enjoyed it, leave a review. Tell us to bring on more guests like Jeff. And if he said something that really sparked a new insight, a new question, share it. If you share us, tag us on LinkedIn or just forward the email to a colleague. I know that's the best way to say thank you to Jeff and I here. Jeff, it's been a real treat. Thanks for coming on.
David, this was awesome. Really appreciate it. We'll talk soon.